that the next big worry is going to be recession. We don't necessarily believe there will be one, but if we're right on what's going on out there and inventories are starting to build up, we've been saying for some time that the inventories in the system are much, much higher than I think most people appreciate. But where are they if they're not in the auto dealer lots? Well, they're in our garages and in our driveways. And everyone knows the familiar story of stocking up on paper goods. We're not going to have to buy them for quite some time. So a lot of inventories are in households.
ARC's Kathy Wood is usually an optimist.
All right, good morning, everybody. So we're gonna do this without music this morning. Having a few problems getting the thing to load up anyway. So we're gonna move on. We're gonna talk about some markets. Before we do, good morning, everybody. Before we do that, let me do something here. Just bear with me 1 second. So somebody wanted me to talk about something here, and it's pretty important. So I'm gonna bring this over here just briefly. We're gonna focus on this. This is an actual curve. Somebody's inside of my Discord, and they wanted me to talk about it. His growth rate on this equity curve isn't going up, and you can see like he has really good gains and then small losses. He's basically chopping around, which is normal in some cases, especially when the market is choppy like it's been. I mean, the markets they really don't know what to do, and some of the big moves are happening during the Asian session, which is something that we rarely ever trade. So I mean, with the current events, you shouldn't beat yourself up if your equity curve looks like this. Now, this P&L goes all the way back from July. All right, July the 15th. So this has got some data to it, right? Got enough data. And you can see that he's got a couple pretty decent spans of just straight losing, which, you know, it's not bad, because if I go back up to that, you can absolutely see that the equity curve is up, right? He deposited it looks like it was deposited $13,000. So I mean, the balance currently is $13,002. That is not down. It's positive. It's not big positive, but it's still positive. Basically, you're in a good spot because you can only learn more from here, right? And as long as you keep mitigating risk, you're not going to have really massive losses. Those massive losses is what usually kills traders, or revenge trading, stuff like that. So let's pop up this one over here. Now you can see this day here would have been nice if you could cut that out, right? That's a pretty big loss on the account's equity. $120, you know, it's a little bit, it's not too bad, right? But it's still bad compared to your winners. So yeah, these days here, you want to stop that if at all possible. The way to do that is by taking one loss per day, not three. I mean, I don't understand really what these yellow numbers are. This is different than mine, but this right here, that looks like you took three losers on the day, and you lost about $140, $130 on a $13,000 account. That's not that bad. So your risk mitigation is decent. So yeah, here, if this is 5 trades you took on this day, I mean, that's way too many. Okay, that's way too many. Two tops. And if the first one you take is a loss, really step back and ask yourself, do you even need to take a third or a second trade at this point in time? Generally, if I eat a loss, especially if it's like a whole stop, then I'm done for the day. I'll just wait till tomorrow. Now, this is with FX, obviously. Stock trading, depending on what kind of stocks you're trading and what kind of strategy you're implementing, will dictate how many positions you're taking and so on and so forth. There's times when trading momentum stocks or penny stocks or whatever you want to call them, when trading those things, there's times that you can take 3 or 4 or 5 entries on one move, right? If you're scalping the range as as the expansion occurs to the upside, and you're just basically getting in, getting out, getting in, getting out, getting in, getting out. But like in FX, you shouldn't be taking 5 trades a day. I mean, because we know with the data that I have that biggest moves happen around the open, each open, right? That's when the most volume comes in during the day is at your opens. We got Asian, London, New York. I only trade the New York session. So with that, I know that the big move or the trade entry is going to be, the high probable entry is going to be from 7 a.m. to 10 a.m., right? So with those 3 hours, that eliminates you trading during all the normal chop that takes place at the end of the day. Now, obviously, I know that FX can move after 10 o'clock, right? We've seen that this week. Moves can happen after, the normal session. That's just out of the norm. There's a lot of things going on inside of the market right now that even professionals, like major hedge fund people, are stuck. They don't know what to do because there's so many things. There's things that's happening that should be bullish on the dollar, but you also have inflation out there. You have supply chain issues, and those supply chain issues are bad. People are not talking about those inside of YouTube much. They're just talking about everything else. It's that's killing. Tesla can't build 5 million cars because of the supply chain issues. 5 million cars they cannot build because they cannot get the stuff they need. And that's worldwide. That's not just here. That's not just America. That's worldwide. That's causing massive problems. Right now on the East Coast, the spot price of containers is up almost 500%. 500%. So, it's down this month. It's starting to go down a little bit, but these things cause more issues later on down the road. So investors don't even really know what to do. So like Michael Burry, he was short everything, short Tesla, short everything. He's closed all those accounts. He's closed all those positions down and deleted his Twitter account. I guess losing 70% of your equity account or your all of your money publicly is a bit more than he could bear, I guess. All right, so back to this you're not doing bad. Do not beat yourself up. Your range or your overhead is decent, right? From 13.4 to 13. So you're in the right realm. We just got to get you to the point to where you're taking less FX trades and crypto. I'm not sure what this is. It doesn't tell me if it's for crypto or FX. We need to get you to the point to where you're taking less trades and you're focusing only on those higher probable setups that will ensure that, at least this way you can get those big losing days down. All right, get those down because those are killing the account. This is a nasty day here. It's okay to have several red days in a row. It's absolutely okay, right? But you don't want to have several red days in a row with these things. This one over here, you got to stop five red trades in a day. If you can eliminate just those two things, eliminate your big red days, eliminate how many times you're taking trades, I think this equity curve will start to slowly ascend. Now, you said in the Discord that you want to see it go to the moon, but let's be realistic. A slow equity curve growth is what you want in this business. Slow ascending growth. And I'm going to do my best to get you there. So this morning I've been looking at everything. There's not much out there in the way of FX. Here, let's do this. So let's go over here to Mr. Bitcoin. Or let's go look at Ethereum first. And let me do this. Just bear with me, guys. I was totally not ready for this morning. Probably this one. Let's go, internet. Do your thing. Just bear with me 1 second, guys. All right. Pull this back over here. We get started now, shall we? All right. So Bitcoin. This is the weekly. It's trading in a slight range. Last night we had an hourly range pulled up, and I went to sleep. It looks like we've taken out the bottom end of that range. It's not bad. The thing is a lot of things are chopping back and forth like this because we have non-farm payrolls tomorrow. Non-farm payrolls are going to be vital in the speed at which the Fed starts to do its taper. If we have a good jobs number tomorrow, that could be bearish for the markets. And the reason being is because a good job number should be bullish for the S&P 500 and the DXY and all that stuff. But if it's a good number, the market participants might see that as bad news, as that means the Fed will start tapering more rapidly. So we will see tomorrow. I'm not going to take any positions because there's just so much uncertainty out there right now. So much. So we're not going to be taking any positions going into that. As far as tomorrow morning, I am looking to take a trade today. Yesterday, what did we take? I took Euro USD, but it did not work out. I ended up closing that position when price traded back up into my entry. I took it here, right here. This told me that I should not take the position. First and foremost, we were watching this level there, and I believe the daily open was pretty close to it as well. So here. So yesterday morning we were watching this area. We were looking for potential shorts. This hourly close, well, I did take a position here. Once price traded up into it and started to fall away, I entered my position there. I did not take profits because I was aiming at the low of day. This was the low of day. You can see price trades away, gets stuck here, and immediately starts going up. And it starts going up with speed. So on the 5-minute chart I was watching it, this just kept climbing. So when it got back up to my position here, I exited it. Right? Simple as that. No, here, sorry. This is where it was. So when price it put in this nasty candle down here. That's not what I want to see. Here is my target, low of day. So we get stuck right there. The only thing that's there is this little 5-minute stutter step. So in a sea of red candles, you have one green one. This one here, it closes the doji, and you get 2 more pushes lower before you retrace out of the area. So if I mark this with a line, you can specifically see that this is what caught price. Tested that right there and then started to trade away. So when it got here, right, it's pushing up too close. It's 8:30. I was in the position since, a while. So like early I entered the position. 2 hours later, it's back at my entry. I X that position out. I try to never, ever eat a stop if I don't have to. The trade is going in my direction. Then it turns around and comes back to my entry after an hour or so. I'm getting out of the position because I'm on the wrong side of the trade. When I enter into a position, I want to see that trade start to work pretty quickly. Within at least 30 minutes, it needs to be trading away from my entry. So since it came back, X that out. Done, right? Didn't eat a full stop. And then I just sat back and watched the markets like everybody else. I had a few stuff on watch yesterday as far as stocks goes, and none of those worked out either. So it's just one of those days. There wasn't much gapping yesterday either on the gap scanners. There wasn't anything that was, really in play. So this week we're seeing a lot of this, right? Even into this morning. Here's your Euro USD. You're still trading inside of this news print. Still trading inside of that. So you're basically inside of this day right here. This big green day, or big red day, sorry. It was green first, but then it turned red. So really and truly, until we get out of this, there's not really much one can say or do. Now, I am looking for this to eventually roll over. So my initial bias is to look for this 1.13027 level to get taken out. So I need to position myself to potentially aim for this, because you're going to smoke 1, 2, 3 days is lows. 3 days lows. All right. If you get down there. And that's basically how my strategy works, is I'm taking entries in the middle or so of the range, looking to target for the high or low of day. So if to put that into perspective, let's get over here and get to today's open, the day that we're currently trading on. Good morning, Pepe. She'll be out in a minute, buddy. All right, so here we go. This is today's range. And as you can see, it's a nasty one. You're an inside day. All right, trading inside day. So, and you're chopping around. You set in a daily high, come down, and you set in a daily low. Now, the question is does the daily low get taken out for continuation, or does the daily high get taken out for continuation? My bias is down because I'm bullish the dollar. I think the dollar is going to start climbing soon once it gets done doing its pullback. But I could be wrong as well, right? You have to keep that in the back of my head too. So I'm going to potentially look to position myself somewhere in this range as long as price keeps it up, right? As long as price isn't moving higher, to go short and to initially aim at the low of day, but the main target would be that low, which is 3 days ago, right? So here it is. This is that nasty daily range. And yesterday we traded inside of it, and today we're trading even inside of yesterday's inside day. So basically price is wedging up, right? Price is wedging up. So it looks something like that. Boom. So eventually it's going to break either to the upside or to the downside. Now looking at the daily chart, it looks like you would want to probably look to position yourself long, because it's been selling off for quite a while, and it's especially now a little bit extended to the downside thanks to last week and the week before that. Had a nice move down. So if anything, choppiness down here or to up, right? But we don't know what's going to happen with this NFP print tomorrow. So that could be why the markets are chopping up sideways like this. There's not much else as far as FX goes for today. Pound dollar having a decent green day. You're still inside of yesterday's range, and yesterday's range is still inside of this range. So once again, it's exactly the same as the euro. Everything is chopping around, and it's making tighter and tighter daily ranges. So we are trying to position ourselves to where we can capitalize on that range expansion to hopefully take out this candle's range. Ultimately, that would be a decent trade, because the more price trades inside of this range, the bigger the explosion will be either way, to the upside or to the downside. Let's go look at USD JPY. This thing's trading crazy because we got yen strength. At the same time, we had a dollar pullback. But typically, if you got dollar strength, this thing should rise. But like I said, DXY had a nasty pullback. Or not nasty. This one had a nasty pullback. So let's put this down on our daily support zone. You can see that we were into support. We did break it with yesterday's close. Now, if this daily range doesn't take out yesterday's high, then we will be looking for continuation lower, simply because this has already happened. The reason I said if we don't take out this high, because if we do take out this candle's high, then what this is a bear trap. It's a trap. It's a close below a close below support to pull in all those bearish tendencies, right? All right, so we close below support. Let's look for pullbacks to get short. So if we take out this candle's high, then essentially that's a trap. Now, if you don't take out this candle's high, what you essentially have is a pullback off of support to find resistance. We have one such resistance there at one spot 11378. 113 spot 378. Not looking to take a short up here because this daily is green. All right. So you're green on the day. So if anything, You have to look for the shorts higher up here, not down here, because of that. Now, we are seeing a little bit of bearish momentum kick up, and this could change things. It could absolutely change things around, but your open is all the way down here. So you got some room to get to before you're red on the day. So I try not to fight against momentum ever. Since there's no clear trade here, I leave it alone, right? I don't see anything. I would like to figure out a way to get bullish, but when it's making moves like this, it makes it difficult to trade. I don't care who you are. If you're trading in this kind of market, it's difficult. It's very difficult. This is when people like me shine, right? So we're going to keep an eye on that level 113378. See if that level fails, or see if that level thwarts price a little bit. Stops it in its tracks, so to speak. You also have an hourly Heath level right there. So if it does get up there, we want to see a rejection. If we do get that rejection, this is not going to be a trade today. More or less maybe tomorrow. So we'll see what happens. S&P 500 took a plummet yesterday, and we were looking for it, right? The reason is because we have massive down day on Friday. And typically, when you have big range bounds, or excuse me, I cannot even speak this morning. When you have a big range like this, you've taken out last week's high and low and closed extremely weak, you can typically look for continuation. Now, in last Sunday's video, I spoke of this, right? I basically told people that we would be looking more or less for the short term to go down somewhere in between the 50 and 618 retracement level. That's what you're looking for. There it is. There it is. Like, this is when you're potentially looking to get short if you're looking for that bearish continuation. And you've got that. So if you took that position, you're in great shape, right? So there's that. Now, a way you can tighten up those entries, you can look at the 50% retracement, or you can look at the 618 retracement, or you can look at your previous green up close weeks range, right? The higher the time frame goes, the more chances are that your high and lows can act as resistance. So if we know that we're looking for price to pull up into the 618 retracement, we know that last week, not this week, but the week prior to last week's low is there, then we can go into the intraday charts and we can look for potential entries, right? So here we weren't looking to take positions because basically I knew that if price was going to go lower, I'd at least want to take out this swing high. And it did that and then gave people what they wanted to see, a little bit of a rejection. So this was a fake out. There's your actual push, taking out anybody that got short here, smoked everybody, went straight up to that weekly, and as soon as price touched it, ding, it never came back. Set in hourly res right there, and then price never even closed above hourly resistance. That's your entry. The problem is what time it was, right? I do not trade after 10 o'clock in FX, and I consider SPX part of that FX trading. So there it is, because it's a 24-hour market, right? There it is. That's your entry. And it was spoke nicely of. If you were bearish, that's where you would be looking for your entries. And there, so it's good to go. Now, I was suspecting that unless COVID, or not COVID, but the Omicron dominates the headlines, then people are going to be looking to short this. People are going to be looking to short oil with all these other things, right? Oil, the reason, because if you're banning planes and stuff like that, you're going to see a move in oil lower because the demand isn't there, right? Your supply becomes bigger. Not enough demand, price heads lower. And that right there was another potential short. Same thing. Look at last week's range. If you are a trader, this one did not give you such a clear-cut entry, but you know where your resistance and support levels will be. Did not even come up in the daily res. Like, this is weak. When you get a nasty day like this, You only tested the midpoint range of this candle alone, not the entire weekly range, just that candle and sayonara. So, yeah, I potentially would not have been able to get in that position. I don't trade oil anyways. So, yeah, moving on to Bitcoin. Was looking for Bitcoin to hold support, and we are not getting that. Yesterday, we traded up into key areas of resistance, this being one, $58,987. I very rarely ever use trend lines, but when they come into play like this, you have to at least keep them on the chart to know where they are, looking for intraday moves, right? Now, I am short on BAT USDT. I've not closed that position yet, so I'm still short on that. But I did take a long on Bitcoin at the beginning of the week, or at the monthly open 2 days ago. So when the monthly closed, when November's candle closed, I took an entry 2 seconds after that, or before that happened, looking for price to trade up. Give me a second. What's up, man? Here, I'll open it. Here. There you go. Go wake her up. Sorry about that. Thanks, Pepe. Now I don't know where I was. All right, so yeah, keep these on the charts just to know where they are. Traded up into resistance yesterday. Yesterday's range looked great. All right, looked great. So I'm assuming that some kind of news came out late in the day yesterday, because at 12 o'clock. Yeah, 12 o'clock in the morning, so noon, something happened, and this thing just ripped back to the downside. Now, one could say that it was just a test of resistance, and that's what caused it to fail. And you can say that. Like, that's why I technically trade, or I trade using technical analysis, simply because that's all you need in this business. You don't really need to know all the fundamental things. Plus, in my experience, knowing fundamental things can tend to make your bias wrong. So, yeah, we're in a daily downtrend, and basically I've been screaming from the rooftops. There really isn't no reason for anybody to look for bullish entries until you get a daily close above this, and that daily does not get retraced. So, meaning you don't close above it, and then the next day have a big bearish engulfing candle, because then that just means that daily close above was a trap, a bull trap, right? So this is there, and price rejected, and you're seeing it go lower. So where is the monthly at currently? Here, there's monthly. So we'll do this and label that as the monthly, just so that way we know where we are intraday. Back into the hourly chart. So there's your last month's close. This is where I took the position exactly when it closed. Now it closed at 18 or 1900 hours. So this candle here, this is when I took my bullish entry. So my stop was down here. You can clearly see that I've been stopped out. All right. But I was just playing around to see if I'm going to collect data to see if just buying bigger time frame opens or selling them if price is going down, sell them. Let's see if that actually has any bearing or any weight. It does for at least a small bounce. Like if I would have exited the position on this move, then I would have made money. And there's hourly res there. But it's not a very big move, right? At this point in time, my entry would have been a 1-to-1 with my stop, where my stop was. So just buying the monthly open, had I taken profits into monthly res, it would have been a profitable trade. But you can see it just traded around. Got a nice big bounce yesterday, right into resistance, and then boom, straight down. And we took out this low. So now that this low's been taken out, there really is no high probable entry, down or up. Because now that this swing low, and if you look all the way over here, since you made this push up, this is your lowest swing low. You did take that out. So if people, or if they're wanting to move the market up, then they'll buy it from here. If you get continuation lower, then they're selling it. There's no other way to say it, because that's what it is, right? You've already smoked the liquidity underneath that swing low. Chances are it's time for it to head higher. If you're looking for bullish entries on Bitcoin, Your support level is going to be 56,530, 50.99. This hourly support. You do not want to see an hourly close below that level. If you get an hourly close below that level, then you know price is not going up. I am not going to look for bullish entries anymore until we get above that green line. It's as simple as that for me. So I don't care what Bitcoin does until it gets above this green line with a daily close. I am not going to be looking for any more bullish entries. Let's go back out to the daily and just peel this thing apart. Let's talk about this as well. Let's get rid of everything because there is quarterly resistance here. This is your first quarter resistance and also monthly resistance there. And it's 58,800, which it's below 60K. And if you watched last week's Saturday Bitcoin update, you know that as of right now, there's no demand above $60,000. It's not that I'm saying it, price is saying it. As of right now, there is no demand over 60K. So this first quarter resistance is holding still on a daily closing time frame. So since you got a daily close above this is what I'm talking about. That's a bull trap. Closed above resistance, and in your next day, big bearish engulfing. It's not an engulfing because it didn't take out the high, but it's big enough to have done it. So yeah, it's moving sideways and it's accumulating underneath quarterly resistance. This is not what you want to see if you are bullish on Bitcoin. Bitcoin needs to get above 58.8 and it needs to range above it. It needs to set in a range like this, choppy sideways action up in here above 58K to basically pull in demand. If you can't pull in demand, you're not going to move higher. And right now, this isn't how I feel forever for Bitcoin, but as of right now, Bitcoin is a risk-on asset. Bitcoin is a risk-on asset. This means it's traded pretty similarly to the S&P 500. If the S&P 500 is bullish, typically Bitcoin will be bullish. If the S&P 500 goes to be bearish, then typically Bitcoin will be. Now, Bitcoin isn't coupled with the SPX. That's not what I'm saying at all, right? Bitcoin is its own asset and it trades on its own volumes. Basically, though, the market participants as a whole is, if they're bullish on risk on assets, Aussie dollar, Aussie yen, SPX, Dow Jones, all those indexes, if they're bullish then they're probably bullish on Bitcoin. So if there's a lot of trouble out there, which we are seeing, then people will start to take off their positions in the more riskier of the assets. And Bitcoin is among one of the most riskiest assets out there. Now, I'm not saying that to hurt anybody's feelings. I'm speaking truth on percentage moves, okay? I believe Bitcoin's the future, and I only buy Bitcoin. When I'm shorting Bitcoin, I'm doing it on an inverse swap contract, so I'm using Bitcoin to short Bitcoin to make Bitcoin. So I'm only shorting it to make more Bitcoin. I am as bullish. So basically what I do is I hold long spot, and I am selling put options when I'm taking a short on Bitcoin. That's essentially my strategy. It's as long as you can get. Okay? I am as long as one man can get on this asset. But when I say it's the most risky of the risk on assets is percentage moves. This thing can drop 10% in the span of a day. That big day that you had on the S&P 500, it was like a 4% down day, which is a big down day in the S&P 500 this day. It was like a 4% move. Bitcoin dropped 50% in the span of 3 weeks. Right? Not too long ago. So it's the most risky asset as far as percentage daily moves. Now, that's all I meant by that. So I'm not saying that it's a terrible asset and you shouldn't buy it at all. I'm just saying know that it is risky. It does have big swings up and down. Big swings. That's what makes Bitcoin so attractive to retail. Is because you can buy Bitcoin and then in like 3 days, your account can be up 2x, 3x. So, but that also makes it risky. Okay. So what it's doing is it's accumulating, or not accumulating, it's selling off. It's stuck right under quarterly resistance at that 58,800 level. So until you get above that trend line, and until you get above this, Bitcoin's looking for lower prices. Now, this was support. It still kind of is. You did get a daily close below it. This is 53,797, spot 82. You did get a daily close beneath it, but it did hold, meaning price traded away from it and has not been back to it yet. So currently, you have another old support level there. The reason it's an old support level is because of Friday. Boom. You traded down through it. All right. So you broke and closed below that. But since price traded back up into this range, it is currently support still. So those are your main price ranges for today. This is your daily range. I don't want to see a daily close below that, because then the next one we're testing is this lower one down here at 53,797. And then boom, next one is 48. Now, can this swing hold price or catch support? Yeah, it can. I believe it is not the 2-week level. The 2-week level is actually where I'm looking for it to find support at. And that would be this, because when it broke out above this 48 or above this 2-week resistance, it never came back to retest it. And that is all the way down here. So, yeah. There's a big hole there, so I want to see Bitcoin hold its price, obviously, because I'm bullish on it and I want it to go higher. I would love to see people that are looking for $400,000 price targets by the end of the year to be correct. However, as I've spoken many, many times, I just don't think it's possible. That big of a move. That's essentially a 10x from here. All right, so in a span of a month, I just don't see it, right? I'm a realist, not an optimist. We'll put it there. So daily support is still holding. There's nothing to do on it unless it holds support, right? But the hourly looks terrible. The hourly looks like you're getting crushed. Once you put in that resistance up there, 58,800, you can see how much supply is sitting above that level. There is a ton of it. Ton of supply sitting up here. So every time price tries to get up there, boom, it hits some of that supply and comes back down. So they're basically ping-ponging it back and forth in a big range. Now, this big move lower also is very not good for Bitcoin. We're breaking down now because you didn't take out that swing high. So if this was going to be a bear trap, then you would need to take out this swing high, and you did not do it. You got close to getting there, but you didn't take it out. And secondly, you didn't close above it. So that's not a trap. So people are going to look to sell it, right? Any pops in price in a down market, you look to sell into. You are in a down market. You have a daily downtrend. Here's your high. This was your low. This was your low, right? There. So you put in this high, come down, set a low. Then you made a higher high with this swing. So what you needed to see Bitcoin do to complete this price range is to come down, set in a higher low support, then move higher. We got the exact opposite. We took out that swing low. So we have a lower high, lower low on the daily. And if you don't like that enough, I can do it again. Lower high, lower low. So you have two lower high, lower low sequences in this current trend. It is a daily downtrend. The trend line speaks for itself. Boom. Now, I did have a pitchfork once we broke down out of the pitchfork that we were following for a few weeks with that range there. Can put another one here if you like. Something like this. Bing. Bing. All right. And that is Bitcoin's current slope. So anytime you get up into these upper echelon trend lines, people are going to look to short it. Couple that with resistance levels, it's going to make it tough. There's resistance. You're getting closer. So yeah, price moves away. Too much supply. Bitcoin isn't looking so hot, right? It's not. It looks a little weak. Yesterday it was looking great, and then that happened, which is that's not what we want to see. Algo was up 10% yesterday. It's down 5% from yesterday's close, right? From yesterday's close. Let's go look at KuCoin. Sorry, guys. Let me just answer some questions. I've been rambling. Good morning. He checked 12-day chart, BTC, possible traps, thought. Yeah, let's go look at it real quick. 12-day chart, huh? I think you had me do this once before. It's weird. It's like so 12-day, I would want 12 days. What do you mean trap? Oh, you mean this bullish? Yeah, I mean if you close that, you've taken out the low with this. So, I mean, you can consider that a bull trap if you'd like. And you're getting continuation off of it anyways. So, yeah, I mean, potentially this is a bull trap on this chart. Absolutely. Yep, you broke out above resistance. Clearly, that resistance and this resistance. Boom. And then you took out the high, then the low. So that's a bearish engulfing. You didn't close below, right? But that's not what makes a bearish engulfing. You might find some website out there that says that has to be the candle body, but it's not the case. It's the range. The range. So if you take out the previous candle's range, high to low, you have an outside candle or a bearish engulfing, and you're seeing continuation from it. You didn't even get a pullback. What I mean is when you close this 12-day candle, I mean, it's so weird. Why not just use the 2-week chart? I mean, you have a bearish engulfing on the 2-week as well. I mean, and this is an actual bearish engulfing, no matter how you want to look at it. Took out the high, took out the low, closed below this candle's body. So, I mean, yeah, looking for bearish continuation. Let's see if this slope holds price. So you don't want to get too bearish down here, is what that means. Like if you took entries up here, kudos. Look to take profits down here because pros will be. Anybody that got short, they will be taking profits. So I expect another bounce. We'll see what happens. But yeah, it looks bad. You do have one on a 12-day chart. And I guess I'll just put it up here real quick. If you guys don't know how to add crazy time frames like that, you just do it here. Ranges. We want days. And there it is. There's your 12 days chart. So next time you ask, I'll have it ready to go. All right. Morning, guys. Good morning. I'm also short ETH from 47.1239 after 1 hour break yesterday, targeting the low of the day and already took 2/3 profit. Nice work, Danny. For today, I'm long Euro USD at 13222, targeting yesterday's low. Thoughts? Wait. If you're long and you're targeting yesterday's low, you might have wrote that wrong because there's essentially no way you can be long today targeting yesterday's low. So maybe you meant to say you're short targeting yesterday's low. Yeah, that's the way I'm leaning too, my friend. But this is the thing. So far, we've taken out the hourly supply zone, which would have been here. You took that out on a closing basis. So what happens when this happens? We wait. Because if this was going to go over and head lower, it would have done it here. It's also really early, right? So depending on where this candle closes will determine whether or not we're going to be bearish or bullish on the day. I can tell you right now, you're green on the day. So you are above the open. You are 0.15% bullish. So basically what that means is you're typically going to be looking for longs. But we're not, because we know, or we have an overall bearish bias. And the daily chart's bearish. The moving averages say that it's bearish. Everything says that it's bearish. I don't even have nothing on this chart. Low chart. Let me go back to the main one here. Sorry. So unprepared. So unprofessional. So let's use this one instead. That's to not burn out anybody's eyeballs with that nuclear color scheme. Here we go, daily. All right, so you're way over. Oh, this isn't even it. See, I was short in NZD. Swissy, that's disgusting, man. And I had to close the position because it wasn't working. I was just early. Man, that would have been a nice trade. Anyways, I'm still short pound yen, so whatever. Can't catch them all. All right, so on the daily, we're still below the 50, so the bears are still in control of price. And then let's pull up our moving averages so that way you can see, yeah, you're just getting a test of the 21. So this is the thing. Everybody, wants to take a short. You get up into the 21. You got daily res up there as well. So, I mean, as of now, the chart is bearish. Will you get a bounce? Yeah. And you might be, this high might be the target. You're in the daily resistance exactly right now. So there's that hourly. All right, so we know this is daily res. We mark it up as D-res and D-res. And we'll know when we look at the intraday charts, we're not confused as to what's what. Here we go. So yeah, let's get rid of those moving averages as they've done their job. Don't care about them on anything but a daily. So yeah, you're in the daily res. And that's your last hourly close. This is a trap candle. Last night I told everybody to look out for this. A test of this price would possibly be a potential short. If you took that last night, it worked out. And then you could have taken profits once you took out this low. So now you're back there. So it's the definition of an inside day. It's choppy and range bound. So since you took out the low, yesterday's low, by getting short there, this could be the new resistance level. But until that, you have to look at this one. The reason is because this is a trap candle. All right? This is a trap candle. As soon as you did close above this resistance, you immediately got engulfed back in the other direction. So this was a trap. So use your last resistance level before the trap. The trap can act as resistance, but we also know this level will likely act as resistance also. That's one spot, 13418. So we have a daily resistance, an hourly resistance here, so it might find some trouble. Chances are the target is this at this point in time. The reason I say that is because you've already smoked the low. With this move here, you took out this swing low. Back up there, down, took out this swing low. So 3 swings, you've made lower swings. Or you're making a higher high. So it's like, it's probably going to look for higher prices. Tomorrow's NFP, so a lot of these things are going to have trouble. A lot of these things are going to be trading range bound. Just be careful. Those yellow numbers include partial profits taken off the one trade. Gotcha. All right. Thank you, Adam. And that was Adam's as well. What's up? What's up, Mr. Epic? How's you SPL USDT? Let's go look at it. SPL USDT. What did I do wrong? Did I do it wrong? Oh man, don't do this to me. SPL is Splunk, SPLK. Why doesn't that pull up? Give me 1 second, my friends. SPL USDT doesn't come up, my friend. I don't know. Maybe you can give me a different ticker. AXS, USDT, KuCoin. It's going lower. This is because Bitcoin is. Let's get the daily though. I mean, it's range bound on highs. This is going to be your ultimate support, but I mean, in the near term, support is going to be here. You're at the highs, you're at daily resistance, so you're pulling back a little bit, but it doesn't look disgusting. It's not nasty, right? Like you went up into the resistance and you failed, but you didn't close lower than this candle, so it's not nasty. So you can watch this candle's low. I mean, you've already taken it out. So basically intraday, you're going to want to see a new hourly trend start to form. And you're not getting that. So this is that low, right? You took it out. So same scenario with Bitcoin. If this was just a liquidity grab, then price should start heading higher. You're a red on the day. There's your daily open. And if you can see right there, it looks like price is rejecting at the open. So it's bearish. I mean, order flow is showing you at this point in time that, it's bearish. It's wanting to make lower lows. Now, anything can change. Any news item can come in. When you have high-risk news items happening, then you can throw technical analysis right out the window. All right? 100%. It does not work in those environments. But as long as there's not that happening, you can check the technical levels, and they're objective, right? Hourly support is there, 132.827. As long as you're not closing hourly candles below that, you could potentially aim for the high of day, which at this point in time is this. So that would be your ultimate daily or your intraday target if you hold support, but it's bearish. So I wouldn't be, myself, and I would not be looking to take a bullish entry down here unless it holds. All right, it still looks bad, but it can hold here because that was a key swing low. So those are your intraday levels. 135.519 is the daily high, and if it holds support here, then there potentially you can look for another move back to the upside, but I wouldn't count on it. Great insights as always. Thanks, brother, for your time. You are welcome, Ricardo. Thank you for being here, my friend. Can you look at SPL USDT? Man, I swear that thing doesn't work, Mr. Epic. If you can give me another ticker, I can't. For some reason, it does not pull up. SPL USDT. There's nothing. So, I don't know what to do about it. I am done with the D-Res. I'm down with the D-Res. Yeah. I don't have anything to add right now. Chops ranges, but I'm wearing pants, and that's how I trade, bruh. All right, so .USD. Wait, let me finish what I was reading about, Mr. Epic. Can you tell if price is being manipulated? You can't. It's impossible. All right, guys, my strategy is really, really good, and it'll get you in on some fantastic entries and stuff like that, but it's not perfect. And the reason it's not perfect is because I can't see into the future. I can't see whoever's moving price. I can't see what they're doing, right? I can't read their minds, and I can't see what they're doing. But I know where those areas are if price is being manipulated. So if price is being manipulated, then they're going to be aiming for swing lows and swing highs. The reason for this is because that's where your stops are, right? Anybody that's long has probably lower than 131.656. They have. Okay, sorry, I thought I was on pound or dollar yen there for a minute. So anybody that has got long below 131 might have trailed their stop up to this swing low because it's the last swing low. It's the lowest swing low. So basically what that's telling the market is we know that there's sell orders here. We know it for 100% certainty. There are sell orders there. Okay? So by busting through that level, you are reaching for lower sellers. sellers that want to sell at lower prices. So that's why that's market manipulation. That's the market reaching for those orders to stop people out. Okay, to stop people out. And it's also a place that we watch, because that's what we're typically looking to do. We're typically looking to take entries to get into a position for this manipulation. Okay, so basically, if this is my target, which it would have been had I been in a short position, this would have been my target. And there I would have been taking profits. So basically, I want to give my position to these lower sellers. I want to hand it off, so to speak. And vice versa for the bullish side of things. So here's your swing high. We know there's buyers above that level. We know there are. Why? First and foremost, because of people getting short. If they got short, they're looking for lower prices. Their stops are above that swing high. But that also makes them, by default, a higher buyer. A buyer at higher prices. And if I'm trying to sell something, I want to sell something to the highest bidder. Where is the highest bidder? They're there. So we get in a bullish position and we look to sell our position to those higher buyers. It's not market manipulation. It's basically supply and demand in every sense of the word. If you want to sell it, or if you want to buy it up there, I will gladly sell it to you up there. And same thing down here. If you want to be a lower seller, I will gladly buy it from you if you're going to offer it to me at a discount. All right? And that's the whole principle behind market manipulation. And you can absolutely tune into a strategy to trade with it and stop being against it. Now, is your strategy going to be 100% hit rate? Absolutely not, because the markets is 100% random. It's manipulated, but it's also random in the sense that we know not what it's going to do. And there's also times where price does not run lows and highs. It'll go right up to it and then turn around, right? So it doesn't work all the time. It's another one of those everything works in trading, just not all the time adages. So just be careful. That's why we use stop losses, because we cannot know. .USDT, DOT, USD. No, you said USD, not USDT. Let's go look at Mr. Dot. Dot was supposed to break out, wasn't it? Was supposed to have an auction. It was supposed to lock up all the supply, all that. It didn't happen. So that was just a bunch of bull crap to get people to get long in Dot. It did not happen. That pulled in enough buyers at higher prices to get this thing lower. So the market's trading away from those highs. But it's just because of Bitcoin. Once again, pretty much whatever Bitcoin does, the rest of the crypto market follows suit. It's because the algos, the algorithms that trade these things, the market makers, the liquidity providers, they're providing liquidity in Bitcoin. They're probably providing liquidity in DOT as well. It's probably the same company. That's how they make their money. They provide liquidity. They don't care which way price goes. Their entire job is to give you the liquidity so that way you can trade, and they make money on the spreads. So here it is, breaking out, but you're not following through. That was your downtrend. It's a little steep of a downtrend. There's your daily close above it. So yesterday, what you wanted to see is this thing find support. It did not do that. It did not do that at all. You're seeing sell side continuation. Next area of support is down here. It's because of this big range, this big daily range. There's nothing else for me to give you. Intraday, there you go. You got 8 hour support here. So that's good. The reason that it's good is because this candle closed above it. So even though that we're trading below it right now, this is an 8 hour time frame. This candle closes in 4 hours. So where does it close? Above 35.82 or does it close below 35.82? That is the question. If it closes above it, then chances are you can aim for 38.16. Right? If it closes above this level, then chances are you can aim for this level. All right? But if it does close below the level, yeah, probably coming down here to check 34.59. I know it's a very tight range, but that's where we're at. I mean, if you want bigger ranges, then I guess you would have to just pull out the daily and see what's what. There's your daily support, daily res. And you're in the middle of the range. Boom, boom. So I would not be a buyer unless the price was below 34.59. And I probably wouldn't be a buyer because you're buying a falling knife in a downtrend. Now, I usually, when this is happening, would suggest that you wait for price to find support first. Close a daily or two above 34.59. Then you could potentially look for bullish entries targeting 37.80 or 37.98. It's SPL. Oh, SLP. Got you. Thank you, my friend. Did I read that wrong the whole time? I did. I am so sorry. Alright, got it. You had it right the first time, my friend. It's me that was wrong. It says it right there, SLP. I was putting SPL. It's my fault. You're good. Alright, on the daily. Man, it's looking bad, bro. Let's get off of this. Let's go find a little bit more data. Well, there isn't much more data. This thing's only been going down on Binance. So I guess we can go back to, what is this, Smooth Love Potion? Is this some kind of X-rated cryptocurrency? Oh, man. All right, so there was daily support, and you closed below it yesterday. Oh, no. It's not what you want to see. Now, the liquidity was taken out on this green day there. So now the new liquidity is it's low. And price is reaching for it. So I would probably let it stop reaching for lows before I look for any bullish entries. It's definitely bearish. It's only 5 cents. So this is another one of those. I'm gonna buy it just because it's cheap cryptos and it's only going down. And it should have been going up with everything else. So maybe it ICO'd at the wrong time, maybe. It ICO'd on highs. And it's been sold off. So, I mean, as we know, these things can keep going lower because those numbers can keep getting, you can keep putting more zeros in front of them. Just look at Shiba Inu, or Shiba token. So, right now, let it find support, man. Let it find support. I wouldn't short it for sure. Absolutely not. Because you can exhaust sellers. Sellers can be exhausted as well. If the sellers get exhausted, you're going to get a big, big, big bullish spike. Something like that. Boof. Right? So I would not be looking for shorts. Maybe watch 0.05418. You can watch it on a 4-hour basis. Watch how 4-hour candles close around this level here. It's already set in a 4-hour support there. So you don't want to see another 4-hour closure below that. If you're just trying to, like I said, buy it because you're looking for this thing to just one day all of a sudden do a 500x, then I guess you could buy it now. And sorry about that. SLP. I need to put that thing on the watch list. I will in a second. Thanks once again, brother. You are welcome, K4 Liberty. Thank you, my friend. Yeah, I figured that much. No strat is perfect, though. If there was one where all would be billionaires. Yes. Yes, exactly. If there was a perfect strategy out there, it would have been priced out of the market, right? I bought the dip on DOT. Well, hopefully it'll find support soon. Can you check Chainlink too? Yeah. And then that'll probably be the end. I am going to wrap it up after this one. Oh, wait, I don't want to check. I want to do Link USD. Linky, stinky, linky. It's looking like DOT it actually has found a low. This is a 4-hour chart though. Let's go check it out. So you're seeing some bearishness come into it today. Found resistance. Yeah, it's struggling at resistance. So yesterday you tested it, and then you're seeing some downside come. You did not take out yesterday's low yet. So to be honest with you, this looks like a short. And just to that level though. Right? Nah, I would say the move's already happened, and I'd leave it alone. This was a pretty big move. I wouldn't be looking to take new shorts. If you are, you don't want to see an hourly close above this, right? If you're looking for shorts, this is your line in the sand. Where's your open? So daily opens all the way up there. So if you're looking for shorts, I would say 25.07. If you get an hourly close above that, then leave it alone. If you can't even get up there, this is the target. That low. See how you did not take it out yet? So that's still the target. But it could get bought up here too, right? Everything's crazy right now. Everything's trading crazy. Some things are on discount, like he said he bought the dip. So, hey, let's hope it moves higher. DOT USD one more time. Let's hope it moves higher. So it's looking like Chainlink and DOT's doing the same thing. This is maybe Bitcoin's moving higher. But it's just a bounce for now. Daily or hourly res is there. Yeah, we'll see. All right, guys, with that, make sure you trade safe, trade smart, and as always, happy trading, everybody.